I'm Don Harkins with Your Florida House Team and Your Florida Loan Team. Heads are not the only thing being shaved as a result of coronavirus. This week, we're going to talk about lower interest rates, lower number of showings, and lower inventory in Central Florida. Thanks for watching. Today is Wednesday, May 20th, 2020, and we have a market update for you. We're going to jump right in and first talk about the number of new homes that came on the market this week. Last week, we saw 504 new listings in Orange County, and again, I always like to point out, even though we talk about Orange County because it's a good sample size, that's pretty representative of what we see in Osceola County, Lake County, Seminole County, Volusia, Brevard, Polk. Our Central Florida region is pretty broad, but geographically, the real estate behaves pretty much the same. So 504 new listings last week. This week, we saw 442 new listings. So to be honest, we kind of expected to see the trend of increased number of new homes coming on the market to continue. But we actually saw that number pull back. And when we look at the year-over-year numbers, that's down about 16% from the same week last year. So if you're a buyer and you're shopping in the market, you're likely experiencing this decrease in inventory and struggling to find enough homes to choose from, and you're probably seeing that homes are selling relatively quick. That's obviously going to have an impact on pricing, and we're seeing that very much have an impact. Last year, during this same week, the median list price was $275,000. This week, median list price is $312,000, a jump in 13%. So tremendous increase in listing prices. I think sellers are recognizing that there's still a good number of people who have been planning to buy for a long time, who are relocating here, who have stable employment, and that are really intent in the marketplace about purchasing, and they are putting a premium on their houses and actually getting their sale prices. Just how tight is that inventory crunch? It's very tight. So between November 19th, 2019 and May 19th, 2020, over the last 6 months, we saw 4,363 homes sell, or about 727 homes per month. And that's from a 8-mile radius in Central Florida. It's not the entire county, but it's a pretty broad area that's representative of the general region. And in this past 7 days, we saw 1,725 homes active for sale in that same area. So what that leaves us with is 2.37 months of supply. Last week, we were tracking the same numbers, and we also saw a similar number of supply, 2.3 months. What that means is it's a strong seller's market. Buyers are having to write very competitive offers. Homes are selling very quickly, and sellers are getting that premium $312,000 median list price. Tremendous jump over last year. Sellers are actually getting that price. New home builders are trying to ramp up production, and if you're paying attention to the news last week, you saw new home builder sentiment be at a record high. They're going to take advantage and step up and ramp up production, buy new land, build new subdivisions, but unfortunately, that process takes a lot of time. We could see 18 to 24 months before that inventory hits the market. So no relief in the near future. Buyers are actually getting back out into the marketplace. So we saw last week, we're tracking showings for you. And what we saw last week is way off the bottom numbers where showings were down close to 85% year over year. We're way back up. Last week, showings were only down about 15%. And over the last 7 days, they actually didn't change that much. We're still sitting at about a 15% difference year over year in the number of showings. So I think that's to be expected. That 15% could truly just represent the number of people who travel here to view for homes or to view homes for sale. And maybe once the travel restrictions ease a little bit and people get a little more comfortable getting on airplanes, we'll pick up that remaining 15% in showings. As far as interest rates go, we can't show you necessarily what your interest rate would be, and these aren't even necessarily rates that are offered in our market today, but we do have a really good representation of what buyers across the country are locking in for interest rates and what people are locking in for refinances. And what we see is on a 30-year conforming, 3.292% was, as of May 19th, about the average that people were locking. On a FHA loan, it was a little bit higher, 3.4%. On a VA loan, a little bit better at 3.007%. And one of the things that's interesting I want you to take a look at is if you look at the last 30 days in that same index, comes from a company called Optimal Blue. These aren't rates offered by a local bank or anything, but if we look at what people locked across the country, if you look at this chart over the last 30 days, you can see this uptick that we've had. I'm sure you saw the Dow gain 900 points the other day. Economy is getting some good news. Stock market's performing well. All that puts pressure on mortgage rates, and you're starting to see those mortgage rates creep back up a little bit. Hopefully that trend doesn't continue, but what we actually see is the low in the last 30 days actually took place on May 14th. So if you locked a loan on May 14th, congratulations. That was a great move. One piece of good news I did want to share with you, the Mortgage Bankers Association came out and they produced the weekly numbers on loans in forbearance. And last week to this week was the smallest increase in loans in forbearance we've seen since the coronavirus crisis started. So only a 0.25% increase in loans in forbearance week over week. We think that's good news. We're also seeing some news come down about the fact that borrowers will probably still be able to get a mortgage even if their loan has been in forbearance in the last 12 months. There's going to be some relief on the credit side so that those people can still go out and buy and sell new homes if they need to. So we'll get you more info on that when it comes out. But overall, I think the big takeaway from the news we're seeing right now is we've had a drastic and sharp increase, and now we're starting to see these levels kind of plateau. We're starting to see the showing activity plateau. We're starting to see the median list price plateau and kind of hit a ceiling. We're starting to see the number of homes for sale, the months of supply, plateau a little bit. So as a buyer, how do you find success in this market? You write a really competitive offer on price, but you also make it competitive on terms. So our buyer's agents can give you some guidance on how to write that, but it's going to be shorter inspection periods. It's going to be shorter closing periods. It's going to be higher deposits initially. So there's a few things that we can do to strengthen your offer outside of just offering more on the price. If you're a seller, the way you're going to find success in this market is to get your home listed sooner. With 2.3 months of supply, that's an incredible selling opportunity, and there's a lot of qualified buyers. Chances are, if you're priced correctly, you're going to have 2 or 3 offers to choose from, and we're seeing more cash buyers in the medium price ranges above 300 and to 400 and 500 than we've ever seen before. So if you're a seller and you're looking for a quick sale and you want to trade up or downsize, you're going to do very well getting your home on the market right now. If you have any questions at all, give me a call at 321-377-0341. We're happy to help you start the home search process and set up a buyer's consultation. We're happy to help you figure out how much your home is worth and how much it could sell for on today's market. And we're happy to help you get pre-approved for a new home mortgage or for a refinance. And for an application, just text Loan1 to 321-204-1789, and we'll send you that application link. Again, I'm Don Harkins. Thanks for watching and have a great week.